Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to the first top stock picks for 2019. I'm Tracey Ryniec, and I'm joined at the chairs by Sheraz Mian to lead things off in the new year. And we brought you two big tech titans. Both of them are kind of beaten up a little bit here heading into this year, but we like them. So Sheraz, we were talking about this before we came on. You have a tech titan, I have one.
That's right.
We're going to start with yours first.
Sure.
Microsoft.
Yep.
Why do you like it in 2019?
You know, the big question in the market, Tracy, is this fear of a recession. And everybody has given up on all the stocks, particularly the tech stocks. Now, both of our stocks aren't really in those hot, kind of like new, fancy, glamorous names. Right. But they have been beaten down, as you correctly mentioned. I think in early October, Microsoft was trading as high as 113, 114, went down into the early 90s. Now it's about 100. Yeah. There's plenty of secular tailwinds from Microsoft, which should continue driving this stock higher. I mean, there's an opportunity for like trading profit on a tactical basis in the stock as well. But the reason I like it is for more long-term reasons. The transition to cloud, Microsoft has really emerged as a leader in that space, along with Amazon and Google through its Azure and the Office 365 platform. The Windows, which was the main thing for Microsoft for so long, is kind of a struggling franchise, but even there, things seem to be stabilizing. But I agree and admit that that's more tied to like the macro forces and is the more economically sensitive part of the Microsoft business. Overall, the growth trend isn't as closely, overall growth trend for the company isn't as closely tied to the U.S. and global economy as it would be for a more economically sensitive area. And that's just an acknowledgement to these worries in the market, even though personally I don't believe we are heading towards a recession. And once this view gains more currency in the market, we'll see a bid across the board in all the stocks. But even when these worries stick around, companies like Microsoft that has these secular momentum in their business, as I mentioned, the cloud transition in particular, should continue to do very well. I mean, it's a huge company, but in 2019, revenues should be up around 12, 13%. Wow. Another 10, 11% in 2020. You see that in their margins and in the bottom line too. They pay a very good growing dividend, currently yielding about 1.8, 1.9%. And they generate a ton of cash, which they give back through dividends, as I mentioned, and also share buybacks. Yeah. The stock is reasonably attractive for a huge growing tech company like Microsoft. It's trading around 20, 21 times now relative to the forward 12-month earnings. As recently as about a year ago, it has traded in the mid-20s. So anyone interested in a quality tech name that hasn't been hyped up and has driven up in the past on its own underlying fundamentals, I think it's unfair to club Microsoft with the more fancier, glamorous companies. So I think it's a good quality investment opportunity.
I think a lot of people are looking for companies with the cash flow this year. Yeah. And Microsoft is certainly one of those. Absolutely. My gosh, every quarter I go in to look and see what their cash level is at, and it's just been phenomenal. So can't argue against that. Apple sounds very similar. That's right. Even if you, that's my stock, and even if you had swapped out what you just said, you could almost say similar thing for Apple. It's trading a little cheaper than yours. It's around 12 times now. It was trading at 15, almost 16 times at the peak there when we had the largest market cap ever. So it's come down considerably and is much more of a value here. Trades with a similar dividend. That's why I say you could swap it out. It's about 1.9% right now, and it too has the huge share buyback program that it's doing. And then it's still generating that cash. The thing that I like about both of these companies, and Apple in particular, I can't believe I'm actually here espousing Apple, because for many years I've actually kind of been anti-Apple, but I do like the services side of their business. And while it's much smaller, hardware still 85% of their revenue, it is the growing area. And that's where their iTunes is, their podcasts, their cloud service, all of that kind of subscription model where they just kind of have the cash coming in.
Absolutely.
And they're expanding into the television, and that area more so I think will be in their future, the content side. And for the first time this coming earnings season, we're going to get gross margins on the service side. They've announced that they're going to tell us now what the margins look like on that business. And I feel like that's kind of a huge thing going forward with some of these huge tech companies, is that we don't really know. Like, that's been the complaint against Amazon for forever, that we don't really know for sure what some of their different segments are doing. And that chorus of complaint is kind of growing. The same, I feel, with Microsoft. Does anyone really know what LinkedIn is doing? I think they may tell us some things about it, but these other divisions, we don't really know for sure if it's good or bad. So we're going to get some more transparency this quarter, and that's a good thing for these big companies.
I think it will be also beneficial on the Apple front, Tracey, that when the market, on the last earnings call, when they said they won't release the iPhone shipment data, analysts were really disappointed with that. And this quarter, with these gross margin numbers for the services side, in other areas, I think the market will start seeing that you don't really need the unit shipments data to have a better grasp and understanding of the market. So that part of the disappointment hopefully will be taken care of, and people could see that even absent those numbers, you could have as good a reading on the company's finances as we had with the numbers.
Now, the iPhone slowing of the sales, I do think, is an issue. Obviously. Maybe it's possible that iPhone sales have peaked globally, and we've seen the best of that. But I still like the company for the reasons you still like Microsoft: the cash flow, the dividend, the buyback.
The stability.
Yes, stability in what could be a volatile year in the stock market. So if it gets cheaper, I like it even more. But 12 times, not bad. 22 times for Microsoft, not bad either.
Absolutely.
Okay, both of these are Zacks number 3 ranked stocks right now. We're going to get earnings soon, so that's going to influence that rank. So people need to keep an eye on that for the short term there. Okay, well, we'll see how they do as the year goes along. Be sure to join us every week here on Zacks.com and on YouTube for these Top Stock Picks videos, because we do them every week during the year, and we'll be bringing you all the best top stocks all year long. So we'll see you then.